Good day, guys. Apologies for that little bit of a technical delay, if I can call it that. Well, welcome. Today is an interesting day to look at the markets. I've just put up, I hardly do this, but I just put up the 5-minute chart. It's not the 5-minute yet, the Forex Factory calendar. I don't know which calendar you use, but I use Forex Factory. As a price action trader, I'm not really interested with the fundamentals, not because they are useless, but because if you choose to trade as a price action trader, the chart tells you everything that you need to know. And that's what we trade off. But you got to put up the news, especially if you're trading off the 5-minute like we do, because red news announcements, you can see where the impact is red news or orange news, tend to have a very strong impact in the market. So there may be moves that may stop you out of trades, which when the move is quieting down, the market still goes your way. So I have little rules, which I've spoken about quite a few times before, when I'm in the trade. So just to recap on them, if you are a beginning trader, in other words, you've been trading for a year or less, this is the best way to, this is the way I would look at it. Whenever there's red news announcement coming up, you stay out of the market for an hour. Now, when I say stay out of the market, if you have already initiated a trade and your trade is at the proper technical stop, so you don't put tight stops, which by now you know I hardly do, leave your trade in the market, okay? If you are not in a trade, do not get into the trade ahead of the red news announcement, because there will be moves that may or may not work in a direction, which is just huge forces that are coming into the market, extraordinary forces. They come in, do their stuff, and then they're gone. If you have 2 red news announcements, so this is today, Wednesday, 2 red news announcements, then stay out of the market for 2 hours, which would mean that you have to be out of the market an hour from now. If you haven't executed your trade, do not execute the trade. If you are, put a stop in the right place. If you have 3 red news announcements, 8 p.m., this is my local time. So most of you guys on the Asian subcontinent probably will be sleeping at this time. But if you are trading at 8 p.m., look at this. There's 1, 2, 3 red news announcements. There's a 4th one, just 30 minutes later. Call it 4. So by 4 p.m. my time, usually when the US markets open, I don't want to be in the market, okay? Because it's just going to be trading against huge forces that just are going to trade that zone, and they will disrupt the market. So best to stay away. So I put red and orange news. Orange news usually doesn't impact the market as much, so I stay in the market, but I keep trading. I can take a trade just before that. Like when you have the Chinese news, if I'm trading Hang Seng 50, I just trade. Usually the impact is minimal, but if it does move against you, that's fine. You can just continue to take the trade next. So you can do that, with any of the analysis that you have. And of course, your filter has to be all the markets that you trade. Okay, so having said that, let's go into the market. Let's just share our charts. Hope you like my beanie, guys. We are in winter here. It is cold. So excuse my beanie. All right, so presently, I am looking for a trade on Hang Seng 50. Right from the morning, I was looking to go short. First candle, always look at the first candle. Tail at the bottom, measured move of it is there. So one of the patterns that I trade says if we get to measured move of the first candle, I want to see the market turning. That would have been one. I would have wanted to see a close beneath the moving average and back beneath the high of yesterday, green line. And I always want to try and take a trade within the first 9 candles. So the first 9 candles were here. That didn't happen. Instead, we had this move here by the bulls, spike, pull breakout, pull back. There's a measured move. The bulls got to the measured move. So I'm still very short in my outlook, being aware, of course, of where we are presently in terms of, the past 4 days, the market was in a bear trend, a lot of sell-off of most of the stock markets basically crashed, which is fine for us price action traders. We're not holding stocks, we don't have these certificates in our vault at the bank or at home. So if they crash, so be it. We should make money selling or make money buying if they start to rally again. Beautiful bull trend looks like, but if you look at the open, and look at that first candle, then the bulls came in. I would have loved if we were going to trade long, to get one of the other patterns that we trade, having a double bottom here and a higher low and trade. So when this happens, I just keep analyzing the charts. I don't panic. I don't worry. I wait for the market to come to me. For guys who have sat through the Wednesdays at the market, I think you probably know the value of waiting for your strategies. There's many ways to trade. You could scalp, see a bull candle, and jump into the market, and hopefully get this. But if you go back, I have an encyclopedia of chart patterns. For this year only, it's already 500 slides on my PowerPoint deck. And I go back and I look at a bear candle, first candle, and a bull candle, second candle. I can tell you that more than 80% of the time you don't get this, the market turns. So if you just say, well, I see it today, so I'm just going to jump in and trade, trust me, you will lose more money than you make. So happy to miss this one out. Now, other question you could have asked is, okay, if you're looking to go short, and now that it's gone up, is there any way that you would have jumped into the market? Yes, because I was in the market, 3:30 a.m. my time, watching the market. When I saw this bull candle that broke above the high of yesterday, big tick for the bulls. If on the follow-through candle, I'd had a candle starting or opening at the same way it opened, maybe a little bit of a tail, and closing on or near its high here with the close like this one here, near the high, then I would have said, okay, now we have a bull breakout. At that point, coming to the measured move of the bear candle, I would have been thinking maybe it's time to change my case based on a strong candle. Waited for the next candle to see if we get a bull candle, any sort. It doesn't have to be big. It could be a small one like that bull candle or a small one like that. If I'd seen that breakout follow through, then a pullback, and a pullback coming off the 10 EMA, which we use as an indicator of strength, and getting this kind of setup, then I would have taken the trade. None of that happened here. In fact, if you're watching the same time as I was, when this opened, it was a bear candle all the way down here. This happened right from the open of the candle. And that's it. I was thinking, oh, okay. So maybe we get our failed breakout coming down here. Fantastic. Then I'd like to see an attempt to test that high and another 2-bar reversal, whatever we get here, high test, then I'd have gone short. So nothing set up for me to trade here. Market then formed that converging wedge, which is a converging wedge, converging triangle, converging wedge. When you see that, you kind of wait for a breakout and a pullback, which we got, formed from converging wedge, formed an expanding wedge. And convert, expanding wedge, 1, 2, 3, 1, 2, 3. And all you want to get is a decent enough entry. And we just got a series of dodges, tried sideways price action. So there's no ways I would have sold there. If I'd sold there against my strategy, I would have been sitting here now wondering, do I hold on, don't I hold on? So it's got us set up nicely. This is a pretty beautiful chart. When I finished, I would just save it and mark it up and put it into my encyclopedia of charts. But let's wait. If in the next 45 minutes, we get bulls accelerating above this level. Okay, earlier on I put a measured move. So now the measured move is a little bit higher. So it's that low, that high. So if the bulls break out above this trading range, and we get to this level, and we get a reversal at the test of that high, that's the trade I'm just going to close my eyes and take if we get to that level. So that's what I'm waiting for. Very short, very bearish. Let's have a look at GEM 30. Okay, now unlike the Hang Seng 50, the DAX 30 top 30 companies in Germany, when it opens up, when I get into the market, it's already gone for an hour, so I don't worry about taking trades during the open. I'm more interested in looking for trades at the open of the European and London markets. But I always look back to see what's happened. So we had a high of the Asian session here, and the market pulled back. And at the open of the European markets in that zone, the bulls, let me just move this measured move away. For any questions about some of the stuff I'm just speaking through, just pop them in, and then I can talk you through them. By the way, for the guys who attend regularly, the Wednesdays at the market with George, which is the second Wednesday of every month. Just some good news, I think. The show has been going on now for several months, and thank you for your attendance. It's been 8 hours on Wednesdays, which is quite long in terms of staying in front of your charts. I mean, I'm in the market when things are moving up to 16 hours, but that's my capacity. And I only do that Mondays to Thursdays in any case. So chatting with Paul B, I proposed that I want to scale back the show from 8 hours to just 4 hours. Now, we've agreed all of that, and it's already been updated on the Actions to Wealth sales pages. So the show is only going to be 4 hours. And I think quite punchy and quite exciting, because I'm only going to be trading the opening sessions of the Hang Seng 50. It's going to be 1 hour and a quarter instead of 2 hours. Then the open of the European and London markets is going to be 1.5 hours instead of that 3-hour marathon. And then the last one will be the open of the US session, which is going to be 1 hour and a quarter. So the money management show is not there. So it's only going to be 4 hours. The one that's open to the public will just focus on the price action analysis and trades as we're going along for those 4 hours. But if you subscribe to the additional third and fourth Wednesdays, which adds up to 96 hours. So that's 8 hours a month times 12, 96 hours. But there's a 4-hour money management workshop, which brings the total to 100 hours. So if you subscribe to that, then you have 100 hours in a year to spend with me. And in those private sessions, that's when I'll open up a lot of my own private chart patterns and discuss a lot more of the educational side. So pretty exciting. And also the good thing is because it's scaled back from 8 to 4 hours, the cost of the program is scaled back from $3,000 US to $1,500. And you have the option to pay upfront with a discount or to pay on a month-to-month basis. $125 a month for 8 hours is really good value. So a bit of sales spiel and that's it. But Wednesdays at the market, second, third, and fourth Wednesdays with George, 4 hours each. All right, so I am looking to go short again on the German 30. And the reason for wanting to go short on these markets, if you look at all the daily charts, that huge sell-off, we are in bear trends, okay? But yesterday and today are pullbacks. So if we're in a pullback, the goal is to find where you think the market is possibly going to turn and resume back into trend. Because if you can get that trade as early as you can, you will make a ton of money, or you'll extract more wealth than if you try and buy and then reverse and sell. So German 30, we are in a bear channel, okay, which started with that high of the Asian session and that pullback. And interesting enough for us to note, the bear channel itself has got a wedge in it, okay. So the bear channel itself, to open it up, there's a wedge in it. Market went up here to the high of the Asian session, went up again, and then went up again for the third time. So when we see a wedge pattern, then all we're waiting for is to get a clear enough signal here to sell. Now, I'll explain a bit of the price analysis beforehand, but if you get the setup, because the question always is, where do we put our stop? If you are taking the first setup or the second setup, you always put a measured move stop. Okay. There is our measured move, that trading range. So if you get a setup here, double top, even if it tries to break out again and reverse, your stop is here, which makes sense because the stop is above the high of yesterday, HOYD, high of yesterday. That's where you put your stop. If you think, hey, yeah, George, that stop is just too far, accept that that's normal place for the stop, but you can wait for a tighter stop. And where do you wait for a tighter stop? You're going to have to wait for the market to break out, give you confirmation that the bears are strong, pull back again, which could be anywhere here, anywhere lower, who knows. Then you can take that trade with the stop above here, nearest technical level. So always options, you got to decide what suits you. A large stop, you can't take this kind of trade and put a stop here because you think that's most appropriate. You will get stopped out 99% of the times, get frustrated, get disappointed, which we want to avoid doing. Now, why would we put a measured move stop there? Well, here is the reasoning behind it. So let's assume our trade sets up somewhere here. And if you're going to put our stop at the measured move, that's the measured move. Your one-to-one is here. But we are taking a reversal trade. Let's not forget that. Reversal trades, in terms of the trader's equation, we manage our risk. That's, remember, there's three parts to the trader's equation: risk times reward times probability gives you your rewards. We manage our risk in terms of where we're going to put our stop. The reward, because we are taking a reversal trade, is not one-to-one. So if you get triggered in and you get to and you see 1-to-1, do not take it. At the very least, you want to be going for a 2-to-1 reward. Okay. But when I take a reversal trade and it goes my way, that's where, like last week, I, ended up making 9.6% in one move within 7 hours. I posted that on the ATW pages, because you're taking that reversal trade when it triggers, you got to just hold for maximum profits. Okay. If you don't want to take a reversal trade, if you want take your 1-to-1, then wait for the trend breakout, pull back, and just take your pullback trade and just go for 1-to-1. So risk, reward, probability is the other thing. When you trade in, you cannot have both high reward and high probability. It's an impossibility. Doesn't work. I don't know when you guys went to school, when I was still in primary school, they would say, what's George, what's 1 minus 2? All we knew is that it can't work. This is one of those, it can't work. You can't have high reward and high probability, because whenever you take a trade, someone has to take the opposite trade. Okay. So if you had high reward, high probability, there'd be no one to trade with. Now, how that works in this case is that because I'm going for very high profitability, very high reward, okay? Because if this works out, I'm still not going to bank my profit here. I'm going to wait to see if it breaks beneath the low of yesterday and just keeps accelerating and really get huge returns. So that's high reward. But the probability of that, if you're taking a reversal trade, probabilities are low. Reversal trades are only 40% chance of success, which means we can take a trade as clear as we think. 60% of the times it will go either into a trading range or it will come back against us. So those 60% of the times that it goes against us, if you think consider half of them will end up as a trading range. It means for half of that 60%, you can manage your trade. You can see, oops, it's not breaking out, it's come back, it's going out. You can exit your trade at break even. Okay. So of the 60% that goes against us, half of them, 30%, we can manage, which means we're only left with a risk of 30% that it will pull back against us. So that's pretty fantastic, because you're taking a trade knowing that 70% of the time, at the very least, I'll break even, or 30% I'm going out. So probability is low, but we can manage it. That's why when you take these trades, you got to manage them correctly. So we are waiting here for a setup. So news is the problem of the day, because the longer we wait, of course, the more we're trekking towards that 1 hour zone. But remember I said, if you have been trading for a year or less, give it an hour away. But if you've been, you're experiencing your trading, then you don't work on an hour. I work off 30 minutes is the absolute maximum. I don't want to be in a trade. I want to make sure that it's already at a stop. Okay, so very quickly, what else do we see on here? Just to give us some more insight. When the bulls broke out above here, there was no way for us to take a trade above this trading range. That high, that low, that was a breakout point. You always, whenever you see a breakout, you always have to look at the candle that breaks out. That gives you so much information. Okay, there is a breakout candle, but have a look at it. It's a perfect doji. The bulls are strong. Why are they allowing a perfect doji at the breakout point? And the following candle, bull candle, good for the bulls. But look at the tails on top and tails below. Okay, so that's quite problematic. Tails on top, tails below. Again, a bit of a trading range, which suggests to you immediately after this doji that any breakout above this will get to a measured move. That high, that low, and we go to that. So why would you want to take a trade here when 60–70% of the times they only go as far as the height of the trading range. Do not ignore one bar dodgy trading ranges. You don't trade them, but we put our measured moves on them so they give us information. So the market going sideways there is not a surprise because of that weak breakout. Pull back, higher low at that stage. So if you see that that higher low after that failed breakout, you know the bulls are still want to defend the market. Let's see if they can accelerate up. They fail. Market comes back again, and they create an inside candle. Now, at this stage, you have a decision to take. Okay, I'm looking for shorts. I'm waiting for short setup. But if you are trading long, and if for whatever reason you've taken a trade down here with a nice stop, and you want to go in again, so that is a wedge pattern. If you like, any breakout beneath the double bottom creates a third push. So the market went up here, top of this trading range, came back, first push, went up, created a second, went up into a trading range, came down again, turned here, and created a second push. So remember, always wait for the third push. So if you want to take that trade, you take that trade. But here's why I would not take that trade. If you take that trade, your stop has to be down here. We don't put our stop here. I think I've said that enough times. Your stop has to be down here at the technical level. Now, if you do that, so there's the entry. There is the stop. Okay. So at best, you get 1-to-1. For me, I'm looking for a major trend reversal. I may not get it. That's perfectly fine. But if I get it, I'm going to be getting a huge reward. Use that last example, 9%. Okay. So I'm not going to take a trade where at best I can get 1-to-1 at the top and be fumbling around. If I bent 1-to-1 quickly, what's happening? Rather just let this pass, because if it sets up for me, that 1-to-1, I'll be able to get pretty easily. But that's a legitimate buy if you're taking that trade. But if you're taking that, you can't be waiting, hoping that you're going to get a 2-to-1. You can't, because of this pattern that's forming. At that stage, there was a micro wedge in here, small wedge within that high. You also would have seen that that was the high of the US session. Now, here's a little thing which I'm just going to drop in, and we'll discuss it more and more as we progress. But if you look at most of the markets in the past few days, the breakout into bear trend occurred in the US session. Okay, so it has been sitting all day like I do, and then I get to the open of the US session. It's the end of my day, stuff that I gotta do. And I said, okay, I'm packed down for the day. This market didn't give you much today. It's been trading range, whatever the case may be. You wake up and look at your charts and you say, where did this sell-off take place? I mean, it wasn't there. Go back into your charts and you see a breakout taking place in the US session. Now, when you see that, remember, there are guys trading the S&P 500, for example, trading stocks, trading whatever of the US markets. They're not trading 24 hours like we're doing. They are only trading. They're only trading through their session. They're trading from the open of the US markets, which was somewhere within this zone, and there is a sell-off. So the same guys who created this, they're probably, asleep today or at this moment or doing whatever, because they wait for their markets to open. Okay, now we all see that. So when you see, it doesn't take you long. If you see a trend that's occurred, bull or bear, which wasn't there when you went to sleep, go and find out where the breakout happened. If it happened in the US session, you always want to mark the high of the US session. Okay, we haven't had many of those for a while, so they haven't been in my chart analysis. But here we are, high of US session becomes a level of resistance. Sellers came into the market and sold off. Those same kind of sellers are likely to reappear. So that's why for me, the mindset is US. So sell off, sorry, bear trend. High of US session, measured move of this here. Okay, let's take that profit marker of ours. We don't need it. Okay. And this trading range here, if we've broken above it, so from here, so the market went down, pulled back here. Let's open it up, George. Pull back from here to here. If the bulls break out above that, which they did, the goal is here. So you can just see a whole stack of resistance hidden, which are the measured moves. These wedges here, this trading range, we failed to break up above it. So everything is screaming here, bear case, sell, but you gotta wait for the right setup. If you wanna just jump in, put a measured move stop. I don't just jump in, I wait. UK 100, same kind of thing. Start off with the high of US session. So the high of the US session is not the high of the day. It's just the high if you opened your charts and you're based in whatever, New York, and you say, okay, where am I going to trade? Where is it today? The market starts within that zone. And so it basically sold off, a bit of a pullback. So in that session, there was a bit of a doji, and there was continuation there. So that high is pretty critical. Now, look at what happened. We went sideways, almost the same pattern as we had on the German 30, right at that stage. Open it up. So I'm still looking for shorts. We went up there, same setup, pull breakout, pull back, lower low double bottom, wedge setup. So if you had taken that trade, you must say they're legitimate trades, you take that trade, and your stop is just beneath here. So you would have gotten your one-to-one reward, and your call, if you had stopped to manage the trade, you would have, and if you're still in, which I wouldn't be, but you would have banked at least one-to-one, maybe a little bit more. Now, because again, that whole discussion about risk, reward, and probability, just take a sip of the water. So looking for shorts, perfect wedge setup, 1, 2, 3. All these hidden levels of resistance that we spoke about. This tight trading range, there is a level of resistance. If you're in here, by the way, if you're looking where you want to buy, the trading range based on closes. So when you got a trading range, and I've said this a couple of times before, and you're just wondering, where do I put the measured moves? I can't clearly see the high or the low, or there's just this huge candle wick up or down. That's confusing. Just stick up the line chart. It's based on closes. Closes are very important. And do your measured moves using that. Okay. So you'd have expected the market to bounce around here, and it turned, taking your trade, knowing clearly well that this is not a 3-to-1 trade, but it's a 1-to-1 if you want. I would rather just sit back, and wait. Wedge pattern, fantastic. Then you say, okay, I'm waiting just for an entry to get in, which I am, but we haven't as yet got the setup. No, we've got the setup, we haven't got the trade. Now, here's what's interesting. If you keep tracking this. So we're looking to go short. Now we're trying to figure out where. We tried to break out above the high of yesterday, failed. Tried to break up. I'll tell you what this is just now. Oh, it can still show you. Low of the breakout candle below bear trend. So the huge bear trend on the 9th of June, and then the following day they were the breakout. So this is the low of that breakout candle. The market is likely to test that. I'm going to try and put up the chart and I look messy and see if it works. But anyway, let's put up just now. 1, 2, 3. So there's a little wedge pattern here, which we call a micro wedge. A micro wedge is just as strong of bear forces as a large wedge like this one. So this is good. So we broke out above here. We didn't get our entry. So we still have the bears active in the market. So we're still looking for a short. Okay. What we're looking for now is if the bears are able to close beneath the moving average, beneath the high of yesterday, green, beneath the 20 EMA, and give us, already got a moving average gap bar there after a lot of bull candles. First candle beneath, that closes completely beneath moving average, showing that bears are strong. So we just want any kind of close beneath the high of yesterday, or one of these moving averages, then an attempt to resume. We get a lower high and we are off and away. So setting up nicely, 15, almost 20 minutes to go for beginners to stay out of the market because of the double red news. Still another hour if you're a little bit advanced in your trading, so you know how to manage it. Sorry, I wanted to put up the daily. Let's do that. Okay, daily is visible. So that's yellow candle, yellow line. All of this clutter is all the measured moves we have on the 5-minute chart. Obviously, when you go to the daily, it looks condensed. But I wanted to show this. So this was our breakout candle. So we had all of this price action. If you've sat through my guest appearance at on Mondays with Ash and Jeff live trading show, live trading prof is my show, trading buddies. I've spoken a lot about selling off this level, and I've always said this is a sell zone. Okay, so eventually we had the breakout beneath this tight trading range. So that was a breakout candle, beautiful as it comes. Small tail at the top, decent breakout, closing on or near its low. Then whenever you see a breakout, you want to see the follow-through candle to get confirmation that whoever is creating the breakout is strong. There is the follow-through breakout candle. Okay, tail at the bottom. Now, that is a powerful indicator for the bears. They had a breakout, they had a follow-through candle, although they had a tail. The tail did not close above the 50% level, which they've indicated the bulls have reversed it. So still strong for the bears. And then we had this breakout beneath it and a pullback. So in looking at the charts today, you always look to the left. Remember, I always talk about the 3 candles to the left. Okay, so looking at the 3 candles to the left, I said, well, what's the most important price action? Well, there's that breakout, there's the follow through. Then we had a small tail here, try to break out another tail. So that zone is a key area where the bears are likely to come back into the market. That's what it is. So if we go back to the 5. Go back to the 5. So that's, now that makes sense. Okay, so pays to be worthwhile. The setup may come straight after the news. Now, after the news has played out, you want to know when to get back to the market. It's pretty rapid. You watch the news, you see what kind of candle is created. If we get a strong breakout candle, bull or bear, who knows what's going to happen. A strong breakout candle with little tails, you mark the 50% pullback and wait to see if you get a pullback from there, because you want to look for ways to get into the market. So as soon as the news kicks in, the candle that closes the first candle, this time it will be just after at 2:35. I want to see what's happened with that candle. Now, the mindset with news that you need to take in, because it's so unpredictable what's going to happen. It's the same mindset that we bring when you look at the open of the day. What's the first candle done? What's the second candle done? third, can I start to look at trades? So it's almost like at a brand new day. And that means I'm in the market by the third candle, I'm already looking for opportunities. So you don't, after the news, you don't go away for another hour. Just give it first candle, second, third, and start to look for opportunities. Okay, so we are happy to wait until things happen. Let's just do a quick check back before we go. Okay, we are waiting to get up here or here, wherever we get a setup. Let's have a look at Hang Seng 50. Okay, so Hang Seng 50, I don't know what's going to move the markets. You know, this could be a sideways price action, perfectly trading range. There is no noise in the market. If anyone says the market is making noise, just wink at them and say, but you probably need to come to George's price action show and understand price action. There's always information, never any noise. So I don't know if we're going to break out of here before the news, or maybe the news is going to give the impetus to break out above there and we get a double test and all the way down. But I will be patiently waiting to look for those trades. And if we able to catch a decent enough reversal trade and bank some profits, I will post it on the charts. German 30, we've spoken about. Now, a very, 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 very quick look around the other daily charts. So I'm going to see things set up on the daily and then trading. You can see what's happening with Euro. Bear channel. Now, if you see a bear channel like that, okay, there's a level down here that the bears want to get to. So you can expect more selling at some point. Even if you pull back to the top of the channel, there will still be more selling. 70% of the chance. 70% of the time. Aussie versus the dollar. Tight, there's a trading range here. The bears, of course, want to break above that, get a measured move all the way down to 0.64, somewhere down there. The bulls are trying to create a double bottom, in which case they need to do a bit more buying, come back and double bottom the low of 2021 or this new low of 2022. Yen. Okay, we are almost at the measured move. So huge bull trend, pullback, trading range, measured move. So there's likely to be a bounce off here and a bit of selling off on the yen. If the bulls are strong, which doesn't look like they today, they don't have far to go above the measured move. They'll have to recreate this whole thing. So chances are there'll still be a bit of selling happening here. S&P 500. Okay, almost at the bottom of a channel. So we might just get to test that, which is also the measured move of this trading range. Any buying that we see is just a pullback to come and test that channel. And finally, NASDAQ 100 looking exactly the same. Bottom of a channel, expect some pullback. And there's still a long way to go for the bulls. That's what they see. But there's a little bit of a channel here that might get in the way. All right, guys, thank you very much. We will see you next Wednesday, 11:30 and 9:30 GMT. And do not forget the revised Wednesdays at the Market with George, 4 hours only, second week of July. Take care, guys, and back in the office. Marlon, appreciate your support. We'll see you guys. Bye-bye.